a lot of people say last year is the year of like institutions coming in, but have they really pumped in the money already or not? Are we still like at waiting for the institution?
Cryptocurrency exchange.
Non-fungible. We only take Bitcoin and other cryptocurrency.
Hey guys, welcome back to a brand new episode of the Debrief podcast, the podcast about all things cryptocurrencies. In today's episode, as you can see, Jacky and I are sitting on the same side again because we have a very special guest. He's dubbed the Godfather of Singapore's crypto trading scene, and he's the CIO and co-founder of QCP Capital, Darius. Thank you so much for joining us, Darius.
Thanks for having me. Thank you for having me.
So as you know, our viewers are made up of both like advanced crypto users, but also some newcomers to the space, right? So some of them might not know about you or QCP. Do you mind give us a quick introduction to both yourself and your company?
Sure. So I started QCP in 2017. We started as a two-man prop shop. Before that, I was a trader at Diamond Asia, one of the biggest macro funds in Asia. And I was at BNP Paribas managing the Asia FX options desk, or Asia FX spot desk in New York. Started doing crypto in 2016, just doing arbitrage. I didn't know what Bitcoin was then, but there was a 60% price difference between Bitcoin in the globe and in Korea and in other Asian countries. So that's how we started. 2017 we started as a two-man prop shop. Today QCP Capital across its entities have about 80 people, mostly based in Singapore. We do a couple of things. So we trade a lot of crypto spot globally, but focus a lot in Asia. So we trade crypto in Sing dollar, of course, Thai baht, Malaysian ringgit, Indonesian rupiah, Philippine peso. So we have a big Asia focus, but global spot business. One of our biggest businesses is of course crypto derivatives. So we run a very large option book, one of the largest in the world.
Yeah.
I think last year we traded more than $22 billion worth of options.
Globally, what's that amount? And you guys are taking 22 billion.
Globally,
23. Then you'll take 22.
No, not too bad. Not so much. But I would say we how to say it? I didn't check the number.
Okay.
But I would say we are one of the larger ones because there are only a big few names that do a lot of institutional size options.
Yeah.
I don't know how to say what the market share is.
Okay.
But crypto options is still quite small, meaning that the option space is probably about only less than 2% of the whole total spot space. Whereas comparatively in traditional finance, options tends to be about multiples of spot volume.
Right.
So I think there's a lot of growth there. But yeah, I think we were very early in options. So we started doing options in 2018. Back before no one really was trading options in crypto because it's such a new market, right? But we started then. We built a nice business now, and I think there's a lot more potential for that as well. We trade crypto options across exchanges, OTC, and DeFi. So I can tell you this number in the DeFi options vaults. We are about 80-90%
Wow.
of the volume in DeFi options vaults.
Okay.
Options is one of the big businesses, options and other derivatives. We also have a nice venture team.
Yep.
So we've been doing this since very early on. We were active investors, before DeFi. I think, we were very focused on infrastructure back then.
Yep.
Invested in Deribit, Toko Crypto in Indonesia.
Yep.
Then we did a lot of layer ones as well. We were seed investors in Luna.
Let's go.
Avex.
Luna to the moon.
And Algorand.
Yeah.
Then of course in DeFi we did like synthetics.
Yeah.
ETHLand, which is now called Aave.
Yeah.
And stuff like DYDX and a lot of others. There are so many DeFi projects.
Yeah.
Play to earn, we were Axie Infinity investors, seed investors as well. So that's a big one. And we're continuing this theme, right? Play to earn, DeFi, and now I think we are seeing a sort of confluence of DeFi and TradFi. So you are starting to see like options, structured products on DeFi as well. And I think that's something that we are very bullish on. So crypto spot trading, options and derivatives, as well as active ventures.
Got it.
Fantastic. So as you can see, like just from there, we're very fortunate to have you on board and to hear about what you have to say. So I think looking in terms of the macro side of things, right? BTC is at 43,000, ETH is around 3,300, or some would consider that we're in a bear market, right? And I think we look at the Bitcoin fear index. There's a website that measures the fear index. We're in extreme fear at the moment, and so as someone who has like a pulse on, you know, institutions that are investing in crypto, you yourself, you know, have like invested in all these different protocols. Like, what is your current read of the market?
Firstly, I have no idea how they form that fear index.
It's fair.
I tend to think that I'm not very a bit doubtful of actual that it shows actual fear.
Yeah.
Because if you look at the options market, it's actually showing very little fear.
Okay.
So the way we see this is the option prices imply volatility, right? And whether people are buying a lot of hedges, whether they're buying a lot of downside hedges, the opposite is happening actually.
Oh.
So people are buying a lot of topside, meaning they're playing for topside calls.
Okay.
But even before that, right? Hard to say we're in a bear market when, okay, fine, Bitcoin and Ether have corrected from the highs, right? Of 69k and what was it? Forgot what the high when Ether was already.
Yeah.
But you have Phantom, Luna, Atom, all trading at highs or above highs.
Yeah.
Doesn't look like a bear market to me. You have a lot of these projects when they list, they still are going crazy. I mean, we just did like Yuzu Swap, which is on the Oasis ecosystem. Last week it came out 250x, right? You know, so doesn't feel like a bear market to me at all. In fact, feels like opposite. So I mean, I think we released a market update like last week or before that. You know, we showed that the fear index was at extremes.
Yeah.
But the option market was showing the opposite, meaning that what we call this is risk reversals, meaning the relative price of calls versus puts. That means how many people are buying puts versus calls, and it actually reversed to the top side, meaning that it reversed to calls.
Because the prices has came down so much and people realize that
exactly.
It's
so as the day when it hit 40k, I think the market expected that if you break 40k, it's going to toll to 30k.
Yeah.
We also expected the same. We were like, oh shit, better hedge. But it stayed there for like what 10-15 minutes and then it bounced back up.
Yeah.
So I think there was a lot of support there.
Okay.
And ever since then the market has been trading a bit sideways, but not a bear market. I would say personally, I think if we trade more towards 30k, then I would start to say we're in a bear market.
Okay.
Yeah. Because I mean, everyone's saying crypto winter. This is no. I mean, for those who have gone through the 18 winter, this is nowhere close to the 18 winter, man.
No, so I was just telling Jacky the other day, or like actually this morning, where like I think most retail investors, especially when they're new to the market, right, like they go through almost very similar journeys. If it's like their first like dip, right, it'll be like, oh my goodness, panic. Like, what do I do? Did I just lose all my money? Why did my friend ask me to get into crypto? And then by the time it's like your 5th or 6th time where you see like the markets dip this much from like highs or like BTC, for example, you're like, this is just part of the journey. This is normal. This is an opportunity to like buy the dip, etc. Plus,
no, if you like last year that move in May was scary. Right, the move the breakdown all the way down to 30k. And the speed of that was very scary, right?
Yeah.
People were calling back to 10k and everything. That kind of speed, we made money on the move because we were long a lot of options. But could it have gone to 20k? Possible. But you see, it held a certain level. And then after that, it went all-time highs again within the same year. So at this point, I'm not going to call a bear market just yet.
Fair enough.
Yeah. But with that said, I think the macro situation is a bit scary.
Correct.
Right? You have the Fed tightening.
Yeah.
The Fed has printed a lot of money that has driven prices high. The thing that scares me actually is the fact that stock markets are still at highs.
I mean, but growth equities have sort of like, came down a bit.
Very little,
okay,
right? So, and as you can see in the last few weeks, the correlation between Nasdaq and Bitcoin is very, very high.
Okay.
So to me, stock markets are still at highs. That means there's a lot of room for correction.
Yeah.
So I won't call the Bitcoin bottom here. I think there's room for it to extend. But bear market, not quite yet. I mean, in fact, short term, I'm a bit more bullish because the market has factored in the Fed hiking.
Yeah.
In fact, the market is pricing in March at 95% probability that they will hike. So imagine if March they don't hike.
Wow.
Yeah. So I think I will be a bit more bullish than bearish at this point.
Okay.
So the fear index at max, I very doubtful of that. I don't know how they calculate it.
Yeah.
But from what we are seeing in the option market and from flows that we see from clients, I think there's a lot more they're more keen to buy the dip here than anything else.
Got it. So during your role at QCP, right, you do a lot of institutions, right? You know, what's the sentiment over there? Is a lot of like, are there still a lot of interest? Because last year, right, a lot of people say last year is the year of like institutions coming in, but have they really pumped in the money already or not? Are we still like at waiting for the institution, to come in?
Yeah.
So there's a bit of a nuanced answer to this, right?
Yeah.
Most people understand as institutions coming in, they put money, buy Bitcoin. I don't think that's the way it works.
Okay.
We have seen institutional participation,
Yeah.
but institutional participation goes both ways.
Sure.
I mean, this is the same thing that happened that was the start of the 2018 bear market, right? Everyone was very hyped up about the CME futures. So everyone was like, CME futures means institutions going to come in and buy Bitcoin.
Yeah.
Opposite, they come in and short. Because CME allows people to short.
Okay.
So institutions coming in doesn't necessarily mean
It's good news.
that they're coming in to buy Bitcoin, right? They could be doing options, it could be bi-directional. It could, if you look about HFTs coming in, they could increase the volatility because they are pushing markets back and forth. So it's not a one-way trade.
Yeah.
But I would say that there has been increased participation definitely from institutions. But where we are seeing it more is actually more in the VC space.
Okay.
So you see huge VC funds.
Yeah, every other fund.
I mean,
setting up.
all these every other fund setup is like a 10-year lockup with $2 billion.
Yeah.
That is institutional money. On the trading side, institutions come in when we see, right, they don't necessarily just buy Bitcoin straight. I mean, these guys are guys who have been TradFi. They know how markets work. Right?
Yeah.
They're not dumb money. It's not a single direction. They will probably play both directions. And more importantly, they will usually come in with derivatives.
Got it.
And I think that's one reason why we've seen such big derivatives growth, right? Because especially in options, like last year we saw huge growth. I was just commenting to my team that the some of the players that are coming in, the sizes that they're doing are sizes that I only used to see in FX back when I was a hedge fund. Right? Huge sizes. But are they just buying calls or or are they buying spots? That's not the case, right? It could be both ways. So not so straightforward. Institutions coming in equals Bitcoin higher, right?
Yeah.
Secondly, they might not necessarily come into Bitcoin, right?
Sure.
Yeah. Could they have been the ones been buying Phantom and Near and all this? Possible.
Yeah.
Because I mean, to them they would have seen that Bitcoin has had such a big run. Where do I find the alpha and value? Yeah. They could be picking other coins. So I would say on a general basis, I think the whole space is under-owned.
Under-owned meaning?
Under-owned meaning that I think there will be more institutional money coming in. And buying coins. There will be some of that. But at the same time, I think the instis are very wary of the amount of leverage in the space.
Yeah, which is ridiculous at this stage to them compared to TradFi, right?
Compared to TradFi, ridiculous. Right? They are wary that a lot of the Bitcoin longs are not necessarily spot longs. Right. They could be speculative longs, right? Yeah. I mean, and usually that's expressed in the funding rates, the rates that people pay to borrow, or rather borrow to buy Bitcoin. Yeah. And those rates are like easily 5 to 10%. Yeah. If you compare that to traditional finance, it's flat or so the amount of leverage in the space is significant. So I thought we are always moderately bullish everything, but we recognize that there could be volatility because there's leverage cycles and deleveraging cycles. Yeah. So like for example, you saw last year May that we mentioned earlier, that wasn't a case of people don't want to buy Bitcoin anymore. It's forced liquidations. Yeah. Right. Forced liquidations that cause all this leverage to unwind. Yeah. And that could cause coin prices to drop below fair value, so to speak. Yeah. Yeah. So I think it's when people talk about instis, it's very nuanced. It's not so simple. Yeah. And I think derivatives tends to be the way that they enter the market rather than just spot.
Yeah. Okay. Interesting. Okay. We touched a little bit about the Fed's policy. We talked about a little bit about the rates. Are there any other like macroeconomic or like wider headwinds or tailwinds that you foresee in like the next few quarters or so?
I think stock markets are very scary to me. Okay. Because not just that, right? Also inflation. The level of inflation that we are seeing is we haven't seen in decades. So I think the Fed will have to react to it.
Yeah, which is why they're implementing or said that they're going to implement the interest rate hike.
So, but as to not just interest rates, right? But reducing the balance sheet and that kind of thing. I think that part of that part of that policy, it feels to me like the stock market hasn't priced much of that in yet.
Okay. And
the reason why is because there's just too much cheap money around, right? So it has to go somewhere and it goes into the stock market. So I think the bear market, we haven't seen, it hasn't come yet because you can see stocks are still trading at highs. So inflation, the Fed reaction, stock market prices at these kind of levels, if you look at all the price to earnings ratios, it's very, very scary. So the question is when and how far it will correct at some point. That's always the golden question.
The $1 million question.
Yeah. I met Paul Tudor Jones last year in December. I think he said it very well, right? I mean, he's traded the market since the 50s, 60s, and he's scared, right? He's scared. He says that he hasn't seen inflation like this in a long time, and stock prices are at levels that don't make sense anymore, right? So he's very keen to short stocks. That trade will probably make money at some point. But the question again is, when?
But to me, I always feel like it's very hard to be short crypto right now. Like there's so many innovations that's happening in the space. So many people building. A lot of liquidity is moving into crypto, hopefully. Actually not really a lot of liquidity, but just talents and innovative products, and people are building in the space. Every big company, like I always say, any S&P 500 company that's forward looking, right, would have a crypto strategy or NFT strategy this year, next year, right? So it's very hard to short. Or I
will never be net short crypto,
right?
I spoke about this with Paul as well, right? He says he short stocks, but he'll never short crypto.
Yeah,
he will sell what he has, possibly, but he'll never short crypto. Yeah, because again, I say crypto is under-owned. So in spite of a bear market, there can be a repricing of crypto, right? So like you said, there's a lot of innovations happening. There's a lot of money that's still flowing in.
Yeah,
Bitcoin moving from here to suddenly reprice at 100k, entirely possible. Entirely possible. So I think it will never be net short crypto. I completely agree with that. Because we are talking about a market that hasn't fully priced in all the development yet. Yeah. So I think, but with that said, if the stock market crashes, crypto is not going to be spared. Right? There is a very strong correlation and it will follow. The strategy then is, reserving cash to buy on dips. I think don't go short, but take profits. And then, when you get opportunity, you can always buy on dips.
Okay, so in terms of the sideway market or let's say a bear market, for example, how should one make money? Like for me, right, I only do spot trading, and I always tell people just buy and hold, because no matter what, if let's say 5 years down the road, right, if we know that Bitcoin is going to hit 500k, right, it doesn't matter if you buy 40k or 60k right now, because the end is 500,000, right?
Yeah.
So I only know how to do spot and hold. Yeah, so how should one think about making money?
I think for us, give you my own experience. We started trading options in 2018, right? It's a bear market. We actually made a lot of money in the bear market because our strategy doesn't depend entirely on everything going up. Right. In fact, the thing that excited me most about options is that I was option trader in my previous life, right? And typically the options in traditional markets are quite fairly priced, right? The implied volatility, which is the option prices, are sort of accurate to the actual volatility. Right? When I first looked at options, actually was to hedge to buy downside to protect for downside protection to hedge our portfolio. So this was before I even knew anything, right? So I haven't looked at Debrief, which was the only options exchange back then. Looked at it and I was like, wow, the option prices don't make sense. I mean, it's the implied volatility is way above the realized volatility, which is the actual volatility, right?
Give an example of that. How does that look like?
I mean, let's say option prices. Let's say BTC is trading around, I would say, about 60% volatility.
Okay.
Annualized volatility, 60-70% maybe.
Yeah.
If you look, actually not so much. I think about 50%. Okay. Especially the weekend, flat line.
Yeah.
It's trading around, let's say, 50% volatility, meaning that the standard deviation is about 50%, right? So we look at that as the actual volatility of crypto, and if it's a traditional market which is mature, the options will actually price to reflect the actual volatility, right? In fact, usually in the traditional markets, the options are a bit cheaper. It's under the actual volatility. Whereas I remember in 2018, 2018 when we first looked at options, back then BTC was trading around 100% volatility. And looked at the option, it was like it was implying that the volatility was around 200. And the reason is rich is because firstly it's a new market, it's a small market.
Yeah.
And secondly, most of the option participants are speculators.
Yeah.
So they're using options as a way to leverage and to make speculative trades, right? So they're usually buying options. In traditional finance, you have a lot of option sellers. You have private banks that will create these structured products for high yield, ETFs and all this. You know, they use options in a very big way, and they sell options usually for yield, which causes the option price to usually be lower than what the actual volatility is. But there's this value in capturing the yield from selling these overpriced options, right? So I think that was our strategy for the last few years, right? Of course, it's not just sell across the board. You lose money because once in a while, when crypto actually moves, it actually makes that volatility, right?
Yeah.
But every year, there's probably once or twice that happens. The rest of the time, it doesn't happen.
Yeah.
The rest of the time, the options are overpriced. So one of our main strategies is to be selling options to make that richness in options.
Yeah.
But to make sure that we are protected as well when the times where it does go crazy.
Yeah.
So to answer your question, how do we trade in a sideways market? A sideways market meaning that we don't depend entirely on direction to make money. Right. So we need to make money even though it's sideways or it trades down. We would either be doing options or we would be doing interest rate trades, meaning like cash and carry, buy spot, sell futures. And now of course some DeFi as well. So these are trades that are I would say called more delta neutral trades.
Yeah.
It means not dependent on direction.
Change,
not dependent on direction. I think for every person in crypto, should be a very big mainstay of the portfolio.
Yeah.
Right. The approach that I think has worked quite well is you have part of your portfolio that is stable. So in this more delta neutral type trades, and then you have part of your portfolio that, of course, that bets on directions. I would say be more tactical now that the macro environment is a bit more tricky. And then part of the portfolio needs to go into early deals, venture type. So, but I mean, there has to be something that makes income. So I would say the income portion, you use options, you do rates trades. I think those are very important, bread and butter as well.
Yeah.
For us especially, it's a very big bread and butter. I mean, we've survived the bear market, made good money during the bear market because of these trades. And the important thing about this is that this opportunity only comes in markets that are new and relatively inefficient.
Yeah.
And so the crypto market presents this opportunity.
Yeah.
That most people still don't capture.
Yeah.
But this opportunity doesn't last forever.
Yeah.
Right. As the markets get once the instis come in, private banks they see the kind of yields that you have in crypto, the implied volatility you have in crypto. They saliva drip. Because they because you're comparing. I mean, give you an example, right? A very very volatile FX pair, dollar rupee, Indian currency.
Yeah.
The implied volatility is 4%. Very rich already. Aussie dollar and all these are all much lower, right?
Yeah.
Compared to Bitcoin, which the 3 month is about 80-90%.
Yeah.
And this is considered low. I mean, the implied vol in crypto have traded up to 300%.
Okay.
Right. It's absolutely crazy. So I mean, if you talk to any traditional market option trader, they'll be like, it's nuts.
Cannot see, yeah.
It's nuts. So I mean, to the banks and all, it's extremely attractive.
Yeah.
The kind of products they can build on it is crazy. So I think it's good for crypto users to recognize there's this segment of the market that is not just pure buy, hold, and hope it goes up.
Yeah.
That strategy is good, but it shouldn't be an entire portfolio. There should be a part of it where it makes a very good fixed income. And I think this is worth exploring.
Yeah.
Again, going back to our viewers, like we have a lot of viewers who are quite new to it. So they're almost at a stage where, okay, they've been told don't just buy and hold, explore DeFi. And then what's next after that, right? And I think options trading, making money during a sideways market is that next step for them. How would you advise them to get started? Because to a lot of people, it can be quite intimidating, like jumping into options.
Yeah, so I mean, options is intimidating. I mean, to TradFi people is bread and butter because it's a very common TradFi product. But of course, it's not that new. It's not that understood in crypto. But this opportunity has been the biggest opportunity to me for the last few years because, like I said, I think options is going to have huge growth. Firstly, because of the nature of the asset in crypto, right? It's extremely volatile. So you have a lot of space and a lot of inefficiencies to make money on. Secondly, this is a part of crypto that traditional finance guys understand. Traditional finance guys look at DeFi.
They cannot
They think it's a bloody Ponzi.
Yeah.
And to be honest, it looks like a Ponzi, right? You know, a lot of the yield doesn't come from actual yield generation. It comes from token distribution.
Yeah.
You're printing more tokens to give tokens, right? So to them, it looks like a Ponzi. They might not understand it, right? Sure, they can try to make money and everything, but at which point does a bank or a financial institution or a hedge fund come into DeFi and say, this is something that I recognize? I think options is one thing that is familiar to them, looks and smells like actual options, and it's on DeFi. So to answer your question, I think it is quite an intimidating product, and typically the folks who have been trading options are usually accredited investors, high net worth, who have enough to open accounts with us and trade options with us, right? That requires a certain minimum amount, right? Because you need to be accredited to open accounts. It has typically not been available to retail users. They can go on Debrief, but or other option exchanges. But you go there, you see a whole long list of options. You don't know where to start, where to head from tail, right?
Exactly.
Yeah.
It's intimidating. So what I think has been interesting for retail users in the last 6 months to 8 months has been DeFi options vaults on like Ribbon, Tethernuts, and a few others, right? Where it makes option trading easy for retail users.
Yeah.
Right. All you do is also the strategies are set strategies by the vaults. All you have to do is stick your coin, stick your stable coin, and it executes it for you.
They'll do the work for you.
They do the work for you, right?
Yeah.
Might not be the most efficient on earth, but it captures the option return and yield for you.
Gives you some exposure.
In an easy way, so you don't have to go and rack your brains as to what to do. Because I admittedly it is tricky, right? We actually have models to look at the curves and everything. I don't expect anyone else to do that themselves. But yeah, this makes it easy for them, and I think it actually gives a lot of value, right? And I can say it gives value because it's a struggle for me to be on the other side. So if I'm struggling to make money on the other side, means whoever is on the selling side is actually making money. And it's making good money, right? I think the difference between this and normal DeFi is that normal DeFi, like I said, the base yield usually comes from an AMM or some kind of borrowing lending. You get a single digit yield, and then most of the other yield comes from token distribution. They distribute the tokens, right? Whereas this brings something new to DeFi, meaning that it presents a very high base yield on DeFi. So the vaults that you see on these protocols, they yield anywhere from like 20% to 120%.
Okay.
And this is yield whether you give the token or not. It's a base yield, right? It's a yield that comes not from the token distribution, but it comes from monetizing the volatility of the underlying asset.
Yeah.
So if you see that way, it's like an external yield that is being brought in. And this yield is there whether or not the market goes up or go down, right? It's just volatility of the market, right?
Yeah.
So you have that, and then on top of that, you get the token distribution as well.
Yeah.
And then on top of that, you also get the collateral that you put in get staked in wherever, right?
Yeah.
So you get a sort of triple layer of yield.
Right.
I think that's fantastic. So I think to me, that becomes one of a very big going forward. It becomes a very big part of bringing sustainable yield to DeFi.
Yeah.
Right? Of course, DeFi you still have a lot of this token distribution yield, but I think going forward, if that model starts to fail, at least you have a model that brings in kind of option premiums into DeFi, and that can evolve into its own way as well. But yeah.
Okay, so you spoke about Tethernuts. Maybe for our viewers' sake, we can just explain a little bit more about what you can do at Tethernuts.
So let's say Tethernuts has quite a wide range of assets available for these vaults.
Yeah.
So Ribbon, which is the biggest one, has Bitcoin, Ether, AVAX, Aave. Tethernuts has a wide range of it. So let's say if you have a NEAR or you have Boba or something like that, right? You're holding NEAR and you want to earn more yield on it. You can always go to Tethernuts, stick your NEAR in the vault.
Which you're holding?
Yeah.
Just stick it there?
Just put the NEAR into the vault. What happens is the vault will then automatically deploy the NEAR for you, right? Use it as collateral to sell NEAR call options. So the yield now is around 60%, 60 plus 70%. And it's a bi-weekly or weekly deployment. So you put there, you stick for 1-2 weeks, you get the yield upfront. And of course, the risk is, if NEAR goes above the strike, you will lose the difference. But you have to, because the premiums are so high, you have to actually lose more than the difference to actually lose money. or rather lose more than the premium to actually lose money. So I think it's especially in an environment where especially if you feel that markets are moderately bullish and you think going sideways, this is an excellent way to earn premiums, right? If you are holding stable coins and you want to earn and you want to get exposure to near, you can always go to a vault, stick it in the put vault, sell puts. Some of them have physically settled, meaning that let's say if you're bullish near and you want to buy on dip, right? You stick your dollars there. If near drops, you don't actually lose money, you actually buy near.
Yeah.
And you earn money, you earn premiums as well. So becomes a very good buy on dip strategy while also making premium.
The put strategy lah.
Put strategies.
Okay, got it.
So I think we've seen a lot of newcomers come in, like even anecdotally amongst friends, and if they bought like BTC in the last 3-4 months, they most likely will be in a down position.
Yes.
But if you bought the right things, you will probably be up lah. You bought FTM, you bought the right altcoins, right? So I guess as a seasoned individual as yourself, and to a lot of our viewers who are looking for alphas, right? Where should they be buying at the moment?
So I mean, we actually released a year-end piece on this. I'm not sure how many people have read it, but the problem with our year-end piece is it came through too early.
Okay.
So our year-end piece was that one of our strongest views was that BTC and Ether would underperform some of the laggard layer ones, right? Didn't actually say which ones particularly, but I mean, if you look at our Telegram broadcast, we've been quite bullish near as a laggard layer 1, Rose, Algorand, Phantom, what else? Luna as well. In the last month, I think these ones a lot of them have gone up 100%.
Correct.
Right.
Correct.
So going forward, if you ask me what's the portfolio, my own strategy is, I mean, I'm always accumulating Bitcoin Ether. That's a mainstay to me, and I'm usually selling puts, accumulate, and then selling puts, earning the premium in Bitcoin Ether. So I always accumulate, buy when it dips. I think there's still a lot of value in these layer ones. The laggard ones. So the ones that I mentioned, and other laggard layer ones that you might mention, right? That you might see. Wait for the day that the stock market collapses. You will see a huge correction in some of these things, and you're able to buy them at a discount. So I mean, it's a bit scary to buy after it moves 100%. But the crypto market is a crypto market. It always presents you opportunities when the market panics. Because if you look at the way people buy this is again very leveraged, right? There's a lot of leverage in this buying, right? Especially when people chase. So when this leverage unwinds, you usually are able to buy this at dip. So pay attention to some of these layer ones. I think they are still underpriced. But they will be volatile, so that there will be chances to pick some up.
Hey guys, thank you so much for joining us on today's episode of the Chain Debrief podcast, and thank you so much to Darius for joining us on today's episode. If you have any more questions, do ask them down below and we'll try to get them answered. Darius is a very busy man. Also, if you haven't yet joined our communities, the links are all down below. We have Telegram and Discord, as well as social media platforms like Twitter and Instagram. And also, if you haven't yet subscribe to this channel, guys. Like this video. We'll see you in the next one. Bye bye.